Market performance, I mean, turnover is still really low, despite some of these results trickling in and showing really quite positive momentum for growth for a lot of Kenyan companies.
You would think that, but as long as interest rates keep ticking up, the opportunity cost for holding shares will keep going up, and of course, that can be a source of weakness for the market generally.
All right, let's talk about results coming through. There was expectation for equity yesterday. They were stellar. And now Kenol Kobil doing really well. Profits after tax up over 83%. What do you make of the company's fundamentals?
Well, I think they've taken up they've acquired some companies, so that helped. But more importantly, when you look at the margins, the net profit margins, or even the gross profit margins for that matter, they were significantly higher. Perhaps that's because of temporal arbitrage. Remember, in the Nairobi, the Kenyan oil markets are price controlled. So I think they've been doing a bit of temporal arbitrage. Yeah. So you buy, hold, and sell when prices are good. So that helps in improving their margins as well, and as profits. So I think it was a smart thing to move. The question is, could they be able to do it from now on? Yes. Going forward? You might see government coming in a bit more strongly about such tactics, but so far so good.
I mean, obviously going forward, that ability for arbitrage, that's a question, but also the fact that we're seeing, you know, the government keeping on introducing price caps on petroleum products, that's a second issue. But going forward with power outages and generally a sense that there need to be innovations in terms of energy and power supply, and where the oil retailers and oil marketers come to the fore, what do you make of their performance going into the second half of the year?
Well, again, it depends on which company you're looking at. For us, the energy companies to look at, if we're going to go energy, KPLC, however, that carries its own risk, because after December last year, Kenya Power became parastatal again. So that could introduce a few more challenges, especially in an election year. But Kenol Kobil also another one to watch. But generally, given its balance sheet, I expect it to continue trading at a discount of what it should be trading at. But the whole issue of price controls makes everybody jittery. We expect, by the way, even banks to start coming under pressure. They are already coming under pressure, significant pressure from the central bank in terms of the interest rate, the spreads between interest rates, and this could turn into regulatory risk as well. Right. So we're just keeping a close eye on all this. Hopefully the management of these companies will be able to work their way around of it with innovative ideas. Right. But the whole scenario, of course, is one that is unsettling.
All right, Transcentury continues to be down in terms of its share price, and this is quite worrying. Is really and truly, should they have listed at this particular time in the market? Maybe a wait and see approach. When do you think things are going to just look a little bit better for them?
In fact, I'm not even sure they should be listed at the price at which they listed. But of course, it was an indicative price. But I thought the PEs were a bit too high. If you compare with the other listing, the rather expected listing, British American Investment Company, they're a bit more conservative. They're issuing the implied price to book value multiple is about twice, 1.3 times thereabouts. But for Transcentury, the PE, I think, was the cause of concern, and it was too high. And the unfortunate thing, not necessarily unfortunate, but the thing about their earnings has been stable. Right. In terms of return on assets. So there's not much to justify a huge PE if growth rates are not expected to be that high.